Hi everyone. I welcome you again to another episode of our technical analysis series. In this video, we'll be looking at double top and double bottom, two of the most common chart patterns. This is our risk disclaimer. You can pause the video at any time and go through it. So we can begin. Our video is taken from page 23 of the book, Technical Analysis book. So we'll be talking about this pattern here, double top. A double top is a bearish reversal pattern that forms in an uptrend. Very important to note, it is a bearish reversal pattern, which means it's a pattern that will form when we are most likely to get a reversal that's going to go down. And it's important to note that it forms in an uptrend. So if it's a bearish reversal pattern, it has to form in an uptrend, kind of a bearish reversal in a downtrend, unless it's a continuation. But for reversal, you have to look for it in an uptrend. The pattern signals that the current uptrend might be coming to an end. So that's the whole point of looking for this pattern in an uptrend, because they signal that the current uptrend might be coming to an end. You can expect a bearish movement afterwards. So once the pattern is unfolding, the market is going to do what? Drop according to what the chart pattern is saying. The pattern is made of two legs, two tops, and a neckline. The first leg is bullish. So these are the two legs. These are the two tops. And this is your neckline. The first leg is bullish. As you can see, it's going up. It will create the first top, which is a resistance. Sometimes it will form along a previous resistance. And in fact, that's where we are looking for this pattern to form, along or at a previous resistance. If it just forms out of nowhere, we don't consider it as a tradable pattern. It must form in a previous resistance. So the first leg is bullish, so it creates that first top. The second leg is bearish, which is this one, bearish leg. It is resulting from the second top. So this move is originating from that second top. Okay. The neckline is a support created after the first top. So this is our neckline. It is a support or a valley that is created after our first top. In fact, this is a price that will determine whether it is safe for us to trade this pattern or not. This is an example of a double top. This is our first leg, which is bullish, which created that first top. Again, I said it can be reacting to a previous support. If you look at this, you had a support here, which had turned into a resistance. So it's formed along that flip zone. If you look at it, this is our first top, this is our second top, and we have a neckline. So we have this as top one, this is top two, that's as our second leg. This is our neckline, which you said it is the price that will determine if it is safe for us to trade the pair or not. As you can see, it's broke that neckline and then just dropped for quite a number of pips, and this was weekly. So this is more like 500 pips. or even more. We're still going to look at this on the MT4 platform. So just doing the theory part of it now. A tradable in the valid top will form in an uptrend, as we have said. The move will reject at the same price twice. If you look at this example here, price is just rejecting at almost the same price twice. It's rejected on that price. Generally, the length of leg 2 will be the same as that of leg 1. So if this is leg 1, if this is 100 pips, leg 2 will also be 100 pips. But that would be if they are rejecting at the same price. But if this one is rejecting a little bit lower, the number of pips here will be lower than, smaller than the number of pips here. Because this obviously has high compared to this one is high compared to this one. Number of pips here will be lesser from the second leg, will be lesser compared to the first leg. But if you use that value as your take profit instead of using the number of pips, I'm sure you might get even better results if you use that first value instead of counting the number of pips. Then trades on this type of setup are executed at the break of the neckline. So you would say if the neckline is broken, then you can start considering going short on the pattern if the neckline has been broken. Okay. High odds double top will have top 1 slightly above or at the same level as top 2. So if top 1 is slightly above top 2, that would be high odds, high probability on a setup. Because now the market is starting to create lower lows, lower highs. If the second top is above the first top, the setup will be considered as low odds and will therefore be ignored. So if this top is above that top, if it's still printing higher highs, then if your double top will have this higher than that one, that will be low odds. But not to say it's not a double top. You can take it as a double top, but it's not as high odds as if the second top is lower than the first top. And high odds double top will have top 1 at the same price as top 2. But if top 2 is slightly above top 1 and still above, it's even better. So that's sort of saying descending highs will mean that buyers are losing momentum and sellers are taking over. So if you have a scenario where you have this, the market starting to print lower highs like this will mean that there is so much selling pressure. Okay, if it's printing lower highs and lower lows, this is a sign of beginning of the downtrend. That's why you say it forms in an uptrend. Look at this, the market is bullish, it's going up. But unfortunately for this, we can't trace back to see if it was reacting to a previous resistance. But if you look at this, it did create that resistance, put back, came back, tested, if you look at our video where I talk about support and resistance, we said if you mark that as a price, I mean that top is a high price, then it wouldn't have retested. But if you would mark this as a range, trading range, then this was a retest of that resistance, and it created that double top. When you have your neckline, which is the price that will determine for you if it's safe to trade, prepare. Some would probably wait for the retest, some would go aggressively on the break. Again, you have to confirm with the strategy that you're using. If you're using supply and demand, probably look for your trades there at the top. Again, it depends on the trading strategy that you're using. So if you're using support and resistance, again, I'm sure this was reacting to the previous resistance. So you could have looked for trades there at the top. If you're using trendline breaks, I'm sure there was a trendline break going up here. You could have used that for confirmation. If you're using moving averages, I'm sure you had EMA crossing going down. Again, it depends on the trading strategy that you use. This is just to add extra confluence, extra confirmation to what you're already seeing in the market. So this is how the pattern will form. Okay, this will be in an uptrend. On that, if you look at this, it forms in an uptrend. You have another possible double top here. If you look at this, but you don't have any leg going up because this was already in a downtrend. Okay. So if you have something like this, what does it mean? If you have descending highs like this, highs are going down, it means that buyers are losing momentum and sellers are taking over. If buyers still at stronger momentum, then the market is going to be printing higher highs, which is why we don't consider a double top that has higher highs as high odds. So if it starts to do something like this, then that's a good sign. Such a double top will have high odds of completing the pattern. So this will have high odds of completing the pattern. Some would break the neckline and would not complete the pattern, because where do we see that the pattern has been completed? If it goes back to that value, it goes back to that value where this whole move started. Then if it reaches that value, then we say the pattern has been completed. But sometimes you do get patterns that will not complete the pattern, that might turn somewhere around there and then start to go up. Okay, so that's why we are looking for patterns that will form in an uptrend, creating lower highs, and just wait for a solid break of the neckline. Okay, such double top will have high odds of completing the pattern. Our target will be the same price where leg one started. So if leg one started here, because this is our leg one, first top, second top. So there's our leg two, just where leg one started. This pattern signals an end of the current bullish momentum, which will result in a new bearish momentum. So it results it signals that that bullish momentum is coming to an end. We might have a new bearish momentum. Any double top that forms in a downtrend will be ignored. This is a trend reversal pattern. So yes, this will be an example of a low odds double top. This is low odds double top. As you can see, what is the market doing here? As if you have almost everything that you need, you have a double top that formed in an uptrend, reacting to that previous resistance. But here you can't really see the resistance that it's reacting to, but it has been tested this once, twice, in fact more than 5 times, more than 4 times. So you would think that's going to be a valid trade, but look at what it did, because the market was still doing one, creating higher highs when the pattern was formed. It was still creating higher highs. We have a neckline here. We have maybe a convincing break on that candle, which you could have looked for trades going down from there. But where were you going to have your targets? Where this move started, but it didn't complete the pattern. Why? Because it was still showing strength going up. Below odds double top will have top two slightly above, top one is still above. So if you have top two slightly above top one, that's an example of low odds double top. Ascending highs will mean that buyers are still willing to buy at high prices and the momentum is still bullish. Such a double top will have low odds of completing the pattern. So if buyers are still willing to buy, then chances are it's not going to go down. It might go down for quite some, for maybe a short time, then start to consolidate away or maybe continue in the previous trend. So something like this is not high probability. As much as this pattern has low odds, but it's also a valid double top because it did create two tops, so it would be a valid double top. Okay. Notice where the pattern above was formed. It was at a historical resistance level, and the market was bullish. Conditions were good, but because of how it's structured, we'll ignore it. So it has almost everything that you need, but because of these two highs of how they are structured, then we cannot consider that as a tradable zone. Also notice how price broke the neckline but failed to reach the intended targets. As I was saying, didn't reach our target. Then we look at double bottom, which is actually an inverse of a double top. I'm just gonna go through it, but it is actually an inverse of the double top, and then we look at them on the MT4 platform. Double top, a double bottom is a bullish reversal pattern that forms in a downtrend. The pattern signals that the current downtrend might be coming to an end. So this one will form in a downtrend when the market is going down. It's an inverse of what we have, of what we had on our double top. It will form in a downtrend when the market is going down, creating lower highs and lower lows like this. The pattern signals that the current downtrend might be coming to an end. So if it's going down like this, it does like this. Yeah, I had marked previous supports. You can just go on a platform and check if we had that as a support, but I marked it here as a previous support. But you will have something like this. In a downtrend, signaling that the downtrend might be coming to an end. Then you can expect a bullish movement after the neckline is broken or when the pattern is unfolding. This pattern is also made of two legs, but this time it's not two tops, it's two bottoms. And that's where the name is also coming from. These two, that bottom and that bottom, double bottom. So the neckline will be when price is going up from the first bottom. So it will create this peak for that resistance and then drop. That's our neckline. And it is the price that's going to determine if it is safe to buy. That you can optionally wait for a retest, you can buy on the break of the neckline. But you have to wait for the candle to close. You have to wait for the candle to close above convincingly with a strong momentum. Then your target will be at your first peak, at the peak that started that move, that leg one. Again, you can use that peak because this is a peak. You can also use that peak as your target. You can also use that one as your target. You can also use that peak, that one, or that one. But the safest will be the latest peak before that big drop. So it should be that one. Tradable and the valid double bottom will form in a downtrend. The move will reject at the same price twice, as it did here, rejected on the same price twice in a downtrend. Generally, the length of leg 2 will be the same as that of leg 1 if they are rejecting on the same price. This leg will be the same number of pips as this one. But if they are not rejecting on the same price, if this one rejected above or maybe slightly above this, then this will have fewer pips. I mean, just a small fraction compared to that one. This one will have more pips than this one. High odds double tap will have bottom 2. I mean, we'll have bottom 1 slightly below or at the same level as bottom 2. So if this one is slightly below and that one is slightly above this one, that's high odds, or if they are at the same price. If the second bottom is below the first bottom, the setup will be considered as low odds and will therefore be ignored. So if this bottom here is lower than that one, if this created a lower low, that's not a good sign because the market's still going down. If it's still printing lower lows, then it's still going to go down, chances. Now this is an example of high odds double bottom. As you can see, it's creating these higher lows. Okay. If we have something like this, again, check where it formed. This is in a downtrend. It should be at a previous support. Unfortunately, this one I didn't mark any supports. I don't see any supports here, but it should be at a previous support. This is our neckline. Look at that convincing break on the neckline. As I said, some people will wait for the retest. Most of the time, it doesn't retest, unlike head and shoulders, inverted head and shoulders. This one, most of the time, it doesn't pull back for a retest. Your target is at the highest peak, or I mean at the last peak. If you can, you could have also used this one, but also check with your risk management. If your target is maybe too close, maybe let's say you had a target here around that price. This is a little bit too close to our entry point. So maybe you wouldn't consider trading that, or maybe look for high profit margin. You could have used that one, you could have used that one. High odds double bottom will have bottom 1 at the same price as bottom 2. But if bottom 2 is slightly above bottom 1, it's not above, it's even better. Ascending lows will mean that sellers are losing momentum and buyers are taking over. Now, as I said, it's an inverse of double top. Now, sellers are losing momentum, buyers are taking over. The momentum is going to the buyer's side. This will result in price going up even further. So that's why I say these are reversal patterns. If it was going down, it's going to go up because there's a reversal that has happened. If it was going up, double top, it's going to go down because there's a reversal that is happening. Such a double bottom will have high odds of completing the pattern. So if you have something like this, you have high probabilities of price completing the pattern. Our target will be at the same price where leg 1 started. So leg 1 started on that peak drop. This pattern signals an end of the current bearish momentum, which will result in a new bullish momentum. So signals a possible end of this momentum, which will result in a trend going up. Again, it is not every double bottom that you see on the markets that gonna react like this. It's not every double top that's gonna react in a reversal way and end up changing the move of the market. Okay, so you have to be careful and also apply proper risk when you are doing them or when you're just trading these patterns. Any double bottom that forms in an uptrend will be ignored. This is a trend reversal pattern. Now, this is an example of a low odds double top. It's reacting to a previous support here. Created that. It is in a downtrend. It's creating lower highs and lower lows, but this bottom is lower than that one. That's your neckline broken there. Probably didn't reach because our targets would have been on that peak. I don't think this is a peak. Our peak is that one. And in fact, this one is a little bit too close to our entry point. If you use that one, it wasn't gonna reach, but if maybe if you use this, then we have got something out of that. A low odds double bottom will have bottom two slightly below bottom one. So this one is below that one. That's low odds. Descending lows will mean that buyers are not willing to buy at high prices and the momentum is still bearish. I mean, if it's going down like this, it will mean that they're not willing to buy. Okay, they still may perceive prices being high, so they're not willing to buy. They're gonna wait for price to drop even further. So if we have something like this, we'll have low odds of completing the pattern. As much as this pattern it has low odds, but it's also a valid double bottom, so it's also valid because it has two bottoms. Notice where the pattern above was formed. It was a historical support level and the market was bearish. The conditions were good, but because of how it is structured, we ignore that pattern. Also notice how price broke the neckline but failed to reach the intended target. So it broke the neckline, but it didn't reach our possible target. Now, we'll just look at this on our MT4 platform. Now, looking at the chart, this is what you can see. We have here Euro USD creating these two tops. You have a neckline here. We can't use this value as our take profits because it is too close to our entry point. But also we need to ensure that this is forming along previous resistance there. And that on the time frame where it occurs, the higher time frame might be in a downtrend, but this time frame where we see that pattern being formed, it's actually in an uptrend. It was in an uptrend. It's going up, printing high highs, high low. Now, if you look at this, it's rejected here. This is our probably our take profit would have been on this low. Now, The neckline was broken. This is our neckline. This is leg one, top one, neckline, top two. Didn't reach that high. Created descending highs. This is a good sign. Broke that neckline. Also, sometimes it does retest, sometimes it doesn't. And then it just dropped all the way down to that that valley there at the bottom. So this was an example of a good double top. I don't know about this as a double bottom. I do have other examples here. This was a Eurocat. We have again they occur on any time frame, but the time frame that you're looking at must meet the requirements that you want. This one is another example of but this one is an invalid one. Double top. This is leg one, top one, neckline, top two, but the highs are going up. And you probably would have thought this was going to be a good example because it was rejecting on that previous resistance there at the top. This looks like a good example of double bottom, but it seems like it formed in an uptrend, so it wouldn't be that good. But if it was in a downtrend, I think this would be like a perfect example of a double bottom. Because now we have this as a previous support, bottom one, bottom two, and this is slightly above this. So, and then it broke here, started going up. We have that retest of the neckline because neckline would have been maybe somewhere, would have been here. Have that as a break, have this as a retest. Could have traded here, could have waited for retest, take profit at the highest. For your stop orders, you can use the closest support or resistance to this entry point. Like if I look at this, probably have something closest. Might be this one. It's quite big. This somewhere here. You can see how many times price was rejected here, 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 there. Maybe use that as your stop. But again, apply according to your trading strategy. It must be in alignment with your trading strategy. We have an example here of a good double top formed when the market was bullish on this time frame. So creating these high lows, going to react to a previous resistance. It's rejected there. From there. It's rejected there, and then it came back, created another high, which didn't reach that high. You can see it's starting to create descending flows. There is your neckline. Yeah, broken, and then it's just dropped. This you could have closed, maybe looked for targets around there. Maybe I'll stop just above Let me try and look for resistance there. Maybe this one. You see it's rejected there. It's also rejected there. It's also rejected on the same resistance that side. That's an example of a double top, signaling that this move might be coming to an end when it reaches that resistance at the top. Then it started creating these two highs. It had already created a neckline. So a break of the neckline would be a trading opportunity. We have this as low odds double bottom formed in a downtrend, but looking at the lows, they are still descending. This is not a good sign. It's not a good sign. It should be going up. This maybe is a double top, a good double top on H1. I'm sure. Show on a smaller time frame. Yeah, yeah, it is. Look on H1. Formed. That's top one. This is your neckline. This is top two. Just check if this is not. Yes, it is. Reacting to previous resistance side. This is top one. This is top two. This is slightly below that one. That's your neckline. Neckline break, drop, can pull back for retest. Your entry is below this neckline. Use the wick, not the body. Your entry is below this. You take profits on next value. Could be this one. Could be that one. Can automatically take profit. And you stop maybe just above that neckline before the supports resistance there with flip zone. You can even use your line charts to look at that, so that you can clearly see your turning points. If you think this is a small risk, you can maybe use that daily there and just see where price has been reacting most of the time. And use that one also. It's reacted there. It's reacted there. But if you see this as a huge risk, again, then you have an option of reducing your risk. Okay. This is another example of double top. Yeah. Again, the highest time, a bigger time frame than H4 might be going down, but this one is going up because of these high highs, lower highs. Went back to retest this. Then it created these two tops, these descending tops that your neckline at the break. Then take your trades all the way down to that. At the bottom. USDs are double bottom in a downtrend. It's reacting to a previous reacting to this. like this. Then we have that bottom one, bottom two. Neckline is just around there. So you wait for a solid break and you wait for candle close. If it doesn't close, it's not yet to the moon. This one didn't have it. This was the first candle that closed above. And when I put back what looks like a retest, but couldn't reach that point. But if you had my minimum range, it did retest there. But if you have it like this, and I didn't reach that price, that specific price at the bottom. But again, this is on neckline. Even if you can hold, if you can hold, because this is just small retracement. If your entry point is somewhere there, that's a retracement from there, and then all the way up. Reviews this peak, reviews that peak, reviews that peak. This one is too close to our entry point. Okay, and this is our last example. Another double bottom. This time frame is going down. This is high odds. That's our neckline. Just say again if it is reacting to a previous. Well, this is reacting to that. It didn't close above. Maybe you have to push up at one pip or less. It's actually 2 pips. And then it had to break the neckline first. Close above the neckline. So you could go to entry point a little bit earlier, or you could wait for that retest. Target at the highest swing peak bottom. Can use this one because this one is too close. But we can use swings this side because we can use that swing as I said profits for this double bottom because this leg did not originate from that peak. It originated from either that or that, but it can be this one. So we're going where this particular leg started. So okay, and that's the end of this episode. Thank you for watching.